Okay. Yep. All right. Let's see. Warm body. Well, that's okay. I have a weird question. Do I work with Ross Givens? Never heard the name. You have any more context? You mean me personally or the country? Or the company, not the country. Hey, infinitely. See you're here too. All right. Nike's the ticker today, huh? Uh, Billy says that's the ticker today. Whatever. Kind of ominous, but let's see. Oh, could be a gap to green trade, actually. Did they? He's coming in now. All right. Starting to see a nice recovery on the SPY. But 504 level. We were just talking about that, and that's key. We got to get over that level. There he is right there.
There I am. I'm back. Good morning, everybody. Good morning. Good morning. Hopefully today folks can see why I was so stubborn yesterday and why I didn't want to go short. I just didn't see the shorts yesterday. Ken, good morning. Robert, good morning. Kirk, good morning. Brendan, Dave, Petro, how are you? Hope everybody is doing well today. We're just hanging out here waiting for a recovery. Good morning, Adam. Rochelle, good morning. Patricia, good morning. Sean says TRV looking interesting for green. Possibly, possibly. Moondog is in the house. How are you feeling, Moondog? We'll be starting in just a few minutes. I'll give you my analysis. We got a good agenda today. I wanted to talk about the 4x4 setup. I wanted to talk about straddles and strangles. What else did I wanted to talk about? There was a few things: straddles, strangles, and 4x4s. Yes, I'm doing well, BB. I am doing well. How are you? Kirk, I wrote about the reason why I do not want to take the meta spread. One of the reasons is because earnings are next week. Thank you, Krish. Got earnings, 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 earnings. I don't want to do anything before earnings. That's the only downside. Let me share my screen and we can go from there. I hope everybody is doing well today. The market, believe it or not, we actually have NASDAQ positive, the Dow positive. We're not seeing a lot of divergence. Let me just get the chat here. One of the things that I told you guys yesterday was, and I told you guys to look at volatility, and I told you guys that if volatility doesn't go higher, the odds are the markets will go lower. I got a couple of emails. Need to return for 3 days of testing. Ooh, sorry to hear that, Moondog. Hopefully you can have your phone and you can listen to us while you're there. So typically volatility works opposite of the stock market. Now, it's not always. Volatility isn't really a fear index as a lot of people think it is. It's actually just a volatility index. And you can have higher volatility when markets are going higher too, although usually volatility declines as the market goes up. Intraday, you could see, look at today, just going straight down. So yesterday, remember yesterday, the market was just going straight down, right? This is the market yesterday. It broke down and the QQQ was really, really weak yesterday. And now it looks like it wants to recover. But my point here is this. The point here is this. I was telling you guys, we were all here, and I was saying, I'm getting a lot of good short setups, and I'm just skipping them by. I'm not cutting out my long trades. Why? Why? Because volatility did not break yesterday above the previous 2 days highs, and the market did. And volatility is a forward-looking asset. Why? Because think about it. Volatility, implied volatility, VIX, it trades off of the at-the-money options on the S&P 500. If the S&P 500, and I mean the guys who are really moving the S&P 500, I'm thinking those guys have a good inkling of what the market is doing. So volatility is a great filter to use when markets are at near-term turning points, because if volatility, if the S&P is breaking and going towards the 100-day moving average and the volatility is not doing anything, you got to ask yourself what's driving this market. And also notice yesterday, it wasn't the bonds, it wasn't the volatility, it was a lot of price discovery. Now, do you guys remember me talking about this yesterday? And I also mentioned bonds. I said bonds aren't really breaking down. This is good for the market. Do you guys remember me talking about this yesterday? Or maybe I was hallucinating. I don't know. Possible. This day and age, anything is possible. Okay, I did. Good. All right. So one of the things you want to look at in terms of stability of the market is volatility. The other major factor is this. What did I say in the Telegram channel twice today? 504. 504. We need to go above 504. Right here. Notice we went to 503.80 today and we didn't go above. Now, why is that 504 level so special? Because we ended the session one day near there and we started the next session right off and we couldn't break either. So that becomes a very significant pivot for me. Very significant pivot for me. So I want to see if this auction can take prices above the 104 level and it remains there. Exactly. That's why I keep telling you, look, show you this. Right here. Oops. Right here. Publicly, too. For me to feel warm and fuzzy, I need to see the index above the horizontal level, which is above 504. It would show good faith that this auction wants the price to go higher. Now, I posted this at 10:49. It's 11, about 20 minutes ago. And what is the market doing? Now, I'm hoping, because I'm a lot more bullish than bearish right now. I'm hoping that it will just continue, and this is just consolidation. And it's good for it to pause here, build up, uh, create value around here, and then just start distributing higher. Yeah, I would too, Cyrus. So we will see if that happens. Remember, we got lunch in about 58 minutes, 52 minutes. So I don't want to put on any bullish positions right now, and I don't want to put on any bearish positions. Why? Well, I'm pretty bullish right now, and I have a bullish position in the pit, and I'm perfectly happy holding it. It's we're down on the position. Yes, we're down about 22 cents on the position. Yes, we are. I'm, which is nothing, but I'm. Here's the thing. If I was to liquidate this position, I would want to put on the exact same position. So I don't really see a need to put on a new position. And if you guys know what that position is, please keep it to yourselves and don't say it here. So I need us to see us go above this level, and I'd like us to then retrace back to this level and bounce off of it. Right, Matt?
Yep.
Okay. See, we're on the same page. So we're just kind of sitting here watching this level. We're positioned right now very well, watching the market. Now we've got earnings coming up on large stocks. A lot of folks have been asking me, Roger, earnings are coming up. I know you don't like to trade earnings. That's not true. What? When did that happen? No. I say to you always that I don't like to do straight options on earnings because I have no idea where the earnings are going to go. I don't. And if you think anybody has a better than a 50-50 chance, look at 1,000 of their trades and see, and you'll see that the number will come close to. And I'm not talking about averaging in when the trade goes against you, no monkey business. I'm talking about straight trades. You will see that typically earnings are 50-50. If they weren't, don't you think I'd be doing them every other day? Um,
The only people that have any better shot is the huge funds. I remember one time they nailed the earnings for a retailer because they had been measuring with a satellite the number of cars in the parking lot. But
say, whoa, whoa, say the second part of that story again.
I remember reading an article that a hedge fund nailed the retail earnings because they had been measuring the amount of cars that had been in the parking lot with a satellite.
I remember you telling me the story. That's a good one.
But unless you have access to satellites,
I don't have access to
yeah,
satellites. And Clyde may have access to satellites, but even he's not that crafty. Um, so, but do we get our emails today? Did everybody in? Are people just slowly coming in
there's
right now?
245 people in here.
Oh, all right. That's good enough. Want to get closer to 300. Okay. All right. So be
It's
careful,
early.
be careful, be careful, be careful, be careful. I sure like how this stock looks right now. I'm going to talk about it in a minute anyway, but I really like this stock. Thank you, Ken. Really like this stock. Okay. So, so how do when do you trade straddles? When do you trade what is a straddle? What is a strangle? Okay. A strangle, a strangle is when you take your somebody that you hate and you do this to. No, I'm just kidding. A strangle is involves the same strike prices, the same price. Okay. So a strangle involves the same price. Let's not get into buying or selling just yet. Let's just talk about strangles versus straddles, because if you understand the two of them, you'll be able to just say, oh, okay, I'm buying versus selling. So,
In both directions, too.
what?
In both directions.
In both directions,
The
what?
same strike price, but you have a call and you have a put.
Yeah, we're buying. Let's just say for now, we're buying a call and a put, same strike price, same strike price. So a strangle involves either buying or selling the same strike price. Now, when do you put on a strangle, a long strangle? When you expect price to explode. Hmm? No, it's a strangle. It's not a straddle. It's a strangle. Um, Same strike price equals a strangle. Good, Cyrus. So where am I going? What am I going with this? I'll tell you where I'm going with this. Let's say you have no idea where price is going to go. No, clueless. But you think it's gonna. But you think. Thank you, Terry. But um, you think it's going to do something in one direction or the other, but you have no idea which way. Right. You expect a large move, but not sure which way. That's a strangle, long strangle. A straddle is a little different. You're also expecting a big move, but with a straddle, you have a little better direction. You have some directional bias, some directional bias. Not a lot of directional bias, but some directional bias. So if you think you know where the stock is going to go, okay, um, when you think you know where the stock is going to go, but you're not 100% sure, and you're expecting a lot of volatility, a straddle will be better. So, for example, on Wells Fargo, I wouldn't be doing a straddle on it right now, but let's just say I was. You could be buying the 58 call, and you could be buying the 56 put, for example. See, different strike prices, okay? But almost at 504. Got to break out above 504. Um, so again, strangle, long strangle, you're expecting a huge move. You have no idea. You're completely clueless which direction it's going to go. Straddle, you have some idea of where it's going to go. Okay? Some idea of where it's going to go. So let me give you an example. Let's say that some context, okay? Let's say that a stock is, let me see if I can,
I think you are flipping them.
huh?
I think you are flipping them. The names.
I'm not flipping anything. I'm not flipping
Straddle,
anything.
same strike price.
No, strangle, same strike price. Oh, wait a minute. Wait a minute. Wait a minute. Wait, you're right. I always confuse them.
Yeah.
Strangle is different strike price. Straddle is same strike price. Right, right. Always, ever since I was a kid. So anyhow, let me give you an example. Yeah. Straddle, strangle. I say them 100 times. They start sounding alike. So yeah, strangle is wider. Exactly. You too, right, Ken? So, so let me give you a good scenario. Let's say a stock, forget this day today, this update today. Let's just say that Wells Fargo is just doing this right here. And you truly have no idea. You have truly no idea where it's gonna go. Yeah, you've never you have no idea. You have no idea where it's gonna go. Okay. In that case, straddle, same strike prices, right, Matt?
Straddle is neutral. Yeah.
Yeah, okay. Then in that case, you would straddle this, okay? But let's say that we already have some directional bias, right? Well, if you have some directional bias, you may want to get a little closer to the money here, right? And get a little further out on the put side. That's what I would do here, right? It's counterintuitive, Ken. That's what I meant. Exactly. You would think the straddle is wider, right? Alex, it's just when you say it over like 100 times, you start, you know,
The name is really doesn't matter.
yeah. Forget the
It's
name. Let's
just
just figure out what we're doing. Right, we're doing.
know what you want to do.
Yeah,
If you don't
exactly,
know which direction it's going to go, buy the same strikes. If you have a directional bias,
exactly,
buy two different strikes.
exactly. So in this case, because the stock is going up, I would want to do two different strikes. But if it was still in this range, I would probably want to do the same strike price. Okay, so oh, I think we broke. I think we're past 504.
Yep.
Barely, but we're hovering past. That 504 is a big mental block there.
We're dipping now.
We're gonna know if sellers are, because yesterday sellers came in like, let me show you why this is very important. Look at how sellers came in here yesterday, how aggressively they came in. Look how aggressively they came in here yesterday. So I want us to see how well, what I'd love to see is a big green candle here without any pullback. That would go a long way. Okay? That would go a long way. With that said, we're break even right now on that stock that we have in the trading pit, if it means anything. So, okay, so now you know when. Now the question is, should you be buying one or should you be selling one? Okay, that's the next question. That's a good question. What you want to do is you want to look at your implied volatility. And I give you this every let me find it here. Boy, I got a lot of things open. I got earnings, I got a lot of stuff going on here. So I'm always doing research, always trying to help you guys make money, always scheming to help you guys make money. Matt, you didn't see my new highlighter. I had to change my highlighter. The highlighter's not working for some reason.
Oh,
Yeah, the market doesn't like this level. See, it's not having an easy time digesting this. See that? Look. So I said we got to get past this level. Nothing good's going to happen until we get past this level. I mean, really clearly get past this level. Ooh, Adam's up $10. All right, so let's continue. See, I don't know if the market likes this level. All right, so here's the earnings. Here's what I wanted to show you. Every week I show you this right here. I show you this right here. See, these are the ticker symbols, and these are the expectations. So what you typically want to do is this. If you see the number really low, the expected number really low, and you think the number's going to go higher, that would be a good time to go long either a strangle or a straddle. If you see the prices are to the up to, or like Netflix, do you think Netflix is going to move $50 each way? I don't think so. I don't think it's going to do that. So in this case, we would be selling, not buying. Okay? Because what's priced into the market right now is 8.8. And if we think it is going to move, but maybe 9 or 10, and we have a limit on it, we don't think it's going to be an explosive move, what we would do is we would sell different strike prices, which would be a strangle versus a straddle. So again, this is what you use to decide that. And just depends on, this is what's priced in. Look at the ATR, look at the market. And if you see a higher price versus a lower price expectation, but never, ever, ever do a long or a short until you know what the expected volatility during earnings are. Okay. Just wanted to kind of give you guys, a heads up on that. Okay. Where do you get those percentages from? From my head, GW. No, here's where you get them from. I've showed this several times. Here's where you get them from. So let's say, hypothetically speaking, you wanted to do a one on Google for whatever reason. You can go to the option prices and you would go to Google. Google's at 156. So you would go to the closest option that's expiring closest to the money, which would be at this point the 155, which is at 180. And then you would go to the put 155, which is at 56, 57. You would add them together. When you add them together, you get about two. I'm just doing them really simple. You would get about $2.30. Okay. What's $2.30 as a percentage of the underlying price? Okay. Oh, the only problem is we're only going one day out. I need to go beyond earnings. So let's go. Earnings are on the 23rd, so we would go 26. That's what I forgot to do. So 155, $5.55, $4.11. Let's just say it's $9. What percentage is $9 out of 156? That's how you do it. So you go to the closest expiration after earnings because it has to encompass earnings, okay? You go to the closest expectations after earnings. In this case, you would go 3 days out. Right. So I personally think Alphabet can move more than 5%. I think Alphabet can move about, and it's a low price stock. So I think Alphabet can easily move $20. So in this case, I would be possibly going long a straddle on Alphabet. And also, I personally would have a bias more towards the upside. Why? And we're just using Google as a hypothetical. Why? Because A, the trend is bullish. Google tends to outperform, and they tend to be pretty sneaky on their earnings calls. And I would think the stock would go higher. So I wouldn't do the same strike price because I have a bias here. And my bias to the long side, so I would be closer to the money to the call side and further on the put side. Now, folks, this is not an exact science, as you could see here. This is not an exact science. Like a lot of things in the market are not holding here. Like a lot of things in the market are not an exact science, but this will give you a really good understanding of where we're at. So that's the first thing I wanted to talk to you about. The second thing I wanted to talk to you about, yesterday in the morning, and if you don't know what I'm talking about, watch the morning replay on YouTube. Yesterday in the morning, I went in detail through a 90-10 setup, and I showed you what a 90-10 setup is. Basically, a 90-10 setup is a 90-day high followed by a 10-day low, pullback. 90-day high, 10-day low, 90-day high, 10-day low, 90-day high, 10-day low, 90-day high, 10-day low. And the 10-day low has to happen within a month. Okay? All right? I'm just explaining it to you guys so you can understand exactly what I'm saying and where I'm going with this. Yeah, Dave. I wish I was in my backyard. I have my backyard faces the 10th hole. So I'm on the wide side of the golf course. So there's about 300 feet between me and the other houses. And you have all that. It's like a park. It's a nice view. I've done broadcast there before, but I should. It's nice and warm. I should just do it, hang out with Clyde. He'll sit on the table and we'll do all this together. I'll do it sometimes. I'll do it. Next time Matt is not here, I'll do it. I have a mic that you guys will be able to hear perfectly outside. It doesn't pick up any wind. Just have to figure out a day. My wife doesn't like me staying home during the day because I bitch too much about the noise. I complain. I don't you know, she likes it when I go to work every day. I'm less of a pain in the butt. Anyway, so now let's talk. What is the 4x4, and what's the difference between the 90-10 and the 4x4? Well, a 90-10 looks for a 90-day high and a 10-day low. So it's looking for wide pullbacks. When would you want to start using the 90-10s? Let me show you. When the market, you know what? I'll do it on this chart. It's cleaner. When the market goes up, 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 and then starts peeling down for like 5, 6, 7, 8 days. Like this. This is a 90-10 setup yesterday. Matter of fact, I want to show you something. So yesterday, when we came into the day, just want to explain to you, give you the full picture. So this is 90-10 long. Look at yesterday, coming into the day yesterday. 49 setups. 49 setups going into yesterday morning. 49. That's a lot. That's a lot. So to give you some examples, Coin had a 90-10. CLF had a 90-10. JCI had a 90-10. Look at all these stocks. So when you see a big high, a 90-day high, and a 10-day low, we start pulling back. That was these are daily charts. So you could see all of these stocks had 90-10. Now, are they all good? No, most of them are horrible because they pull back too much. But some, like CMI, see that? We want a smaller pullback than the market. So this would work. This would work. I'm just eyeballing them. This would work. This would work. This would not work. See that? Too much. Your leverage is gone too much. This is too much. This would work. And again, you want shallow pullbacks like this. This is perfect, actually. This is about as good as it gets. Matter of fact, I'm going to add that to our list. SK. So, yeah, 90 calendar, trading days, Barry. So that's the 90-10. And I explained it to you yesterday, and now you understand when it's useful. After a big pullback in the market, you want to start looking at 90-10s. Well, what if the market has not such a big pullback? Or you want to find pullbacks that are not as steep, like the kind we're showing you, right? Well, then you look at the 4x4. This is called the 4x4. Let me go to the 4x4. So, see if I got anything 4x4. Oh, this is 4x4 high. Let me go to 4x4 low. Hold on. Right here. I was curious how come it didn't show anything. Come on, 4x4. So you could see here, stock makes a 50-day high or a 40-day high. And then it goes down, and it goes down for 3 days straight. So that's a 4x4. That's a 4x4. That's a 4x4 3 days ago. So this would have been a 4x4 right here. 4x4 right there. 4x4 right there. So this gives you another bite of the apple for shallow pullbacks. Okay, shallow pullbacks. So what you want to see is you want to see a market that makes a 40-day high and then breaks down. Moving averages have nothing to do with this. Now look at the market. Look what happened when we hit 504. What happened when we hit 504? Market didn't like it. The auction didn't like it. Do you see why it pays to look at these levels? Yeah, it's one thing talking about it now, but it's another thing talking about it an hour before it happens. It rejected. Exactly, Ed. It rejected. Let's see if it rejects it again. This is why I'm in no hurry to do anything right now at all. I want to get a good, and we're below the 50-day moving average. So I don't feel, we're in a very precarious situation. Why? I don't like to trade too many shorts, too many longs when we're below the 50-day moving average. But I believe the market's going to pull back up. So I can't trade breakouts right now because there aren't any, because the market sat on an egg for a few days. And at the same time, we're below the 50-day moving average. So I'm kind of between a rock and a hard place right now. Now, did we anticipate this? 10:49, 40 minutes ago. You can't say I don't keep you guys updated. Now I want to see if it's going to break, if it's going to break above this, or if this is going to be the top. Because if this is the top, there's going to be there's a strong 504 rejection level right here. Can't see that if you're looking at the daily chart, although I like how we're bouncing up today. Yeah, it's in the members area, Dave. The 4x4 and the 9010 have been in the VIP room for the last 7 years, by the way. We've used them continuously in that program. But I wanted to show you when it's time to trade breakouts and when it's time to look for pullbacks. Okay? Now, let's go through our scenario. But Roger, you make it look so easy. How come when I do this, they don't work out so? Because I've been doing this for 30 years, and I know what to look for and what not to look at. You guys are just starting to do that. By the way, this is the new service that I've been talking about that Matt and I are testing out. It's called Trader Exchange. Yeah, those are old strategies. Those are strategies from years ago. And it just tells you highlights. Bo Green, I don't think a rate cut is imminent. QE. So like, let's say you guys follow option activity. May call activity on offer 1,000 at 35. I mean, this is really good. It's called Trader Exchange. Not trying to sell you anything. And you probably don't need it if you don't need it if you have me in Telegram. But if you're listening, if you want to become rely on yourself in the future, that's a good way to do it. Okay, stocks. Let's talk about stocks that we like and don't like. My main concern is I honestly hope that I've been keeping you guys out of trouble. That's what I want. I want to see you guys keep you guys out of trouble. If I can do that, the rest will come. Let's do the short side first, okay? Mark says, how do I get Telegram fixed? Mark, why don't you call customer support? They did a video on Telegram. There's a video on how to get Telegram going. All right, LVS, Las Vegas Sands. Have Lance, there you go. You have Lance for option activity. There you go. That's perfect. Perfect. Ooh, Amazon up 16%. Good. A lot of people learn if they get into a little bit of trouble. So are we looking at the stock right now? Let's go to a different screen. Let's look at Las Vegas Sands. No, it's kind of bucking the trend. So I'd like to see it go down. I want something that's going down and going down today. This is not going to work for me. Let's do another one. PLD. Oh, yes. Yes, yes, yes. Broke down and going lower. We like this. We like this. Mark, there's a video. I haven't had anybody who had problems with Telegram. That's basically what I'm trying to say. All right. I would put a stop loss right here, 113.20. We would be looking at puts. We would be looking at 29 days out. We would be looking at 67 delta. It's close to 70. 110 put right here. Yeah, Mark, that's something between you and them. Just have them unblock you. Oh, banned you? Well, use a different phone number. Use your wife's phone number. I don't know why they would have banned you. Why don't you use your wife or your girlfriend's or your son's or your daughter's phone number? Just use a different phone number and just have them confirm, and then you're good to go. Okay. Microsoft's not going down. Google's not going down. Yeah, that's why I'm said get on the call with them and say, hey, I'm about to log into Telegram. Stay on with me. Tell them it's you. Just give me the code. You put in the code on your computer. You got it to go. My wife has my Telegram on her computer that way, Mark. Just real simple. What is the phone? Use one of your friends or relatives' phone numbers. That's what I'm trying to tell you.
You can also go to Google. Well, I don't know if they still do this, but
Yeah, you can get a Google phone
you
too
could
if you
get a
want.
good Google phone number for
Yeah,
free.
you could forward your phone to a Google phone, Mark, and use that if you want to. It's called Google Voice. Yes, Ron, big time. I'm looking at that right now as we speak. Okay, but you see why I'm not going long or short, and why I'm so at that looking at that 504 level. Monkey business. Can you move the option chain to the right side? Yes, I can. I could just move it right here. How about that? All right. So right here, stop loss. You guys have your orders here. CTSH. Yeah, so far, it looks like we're going higher on the market, but if we can't break above 504, there's no soup for us. And you know me, Uncle Roger loves his soup. I was reading a funny article, not a funny, actually, a sad article. I was reading, my mom is a huge I Love Lucy fan, and I was reading an article about Ricky Ricardo. Get this, Matt. The guy used to, you know what he used to eat for breakfast?
Mm.
A bowl of tomato soup with alcohol, with vodka. Bloody Mary. That was his breakfast. Like, wow. Breakfast of champions there. Sad, but true. All right, right here. CTSH, about 70, your 15-day EMA, so your stop loss right here. We would look at 29 days to go. 75 delta. We would go to 70 put right here.
Have you ever heard of Winston Churchill's daily
No, I haven't.
routine? Oh
No,
man,
no, no.
that guy could put some skin down.
All right, breakdown right here. APLS. The 200 would be a perfect stop loss. It coincides with the 15-day. We want to go 29 days out. We want to go to a. Oh, well, there you go, Tim. That's good. Good. Yeah, Eddie, that's why I think the market wants to go higher because the VIX keeps going down and bonds aren't really doing anything. 82 delta right here, 55 put right here. You can go 50 if you want, but I wouldn't. I'd go to 55. Thank you for that, Eddie. I appreciate it. Let's continue. FR. This thing just wants to go down. I gave this one to you yesterday too, by the way. Have you guys been making money on any of my trades at all? Just out of curiosity. The options are illiquid here, so I wouldn't really go. I really wouldn't do much here. I would just go with the underlying. Okay, good. BANGE, good. Excellent. Next one, LEGN. Oh, what a stinker. But you'd have to go 69 delta right here, 50 put, and I would put my stop right at the 15-day EMA right here. It seems like a lot of folks don't take the short side because the shorts have been going crazy and doing really well. Good, Vivek. What about shorts? Have you guys been making money to the short side? I want you guys to trade both sides of the market. Good to trade both sides of the market. Good. Oh, we got almost 300 people in here. Next one, LH. What a stinker. Right here, this pivot would make a perfect stop loss, right about the 207, 208 level. You'd go 29 days out, you'd go to the 92 delta, and you'd be right here at the 210 put. But Roger, you go out too far. I don't want to spend so much money. You go too deep in the money. Hey, listen, $12 is a hell of a lot better than $200, okay? Good, Vivek. Good. Come on, if they like to hold out on me.
They sure do.
Hey, let me explain something to you guys. A lot of people coming into this business, into this industry, are extremely skeptical, and they think that there's a bunch of that everybody who does what I do is a crook. There's a very nasty sentiment towards financial industry gurus or leaders or thought leaders, whatever you want to call them. When you give me your testimonials, I post them and for new people to see. So if you guys like what I'm doing for you and you want to help other people make money, that's the purpose of me asking you for those testimonials. I'm not asking you to make me feel better about myself. So that's the reason. That is the reason why I ask you for the testimonials. I don't ask you for testimonials on any other reason. Should have analyzed the trade before opening position. The next time will not place order before study the trade. Cyrus, you should also look at the rollover that we'll end up doing tomorrow on it as well, if it continues going down. No, nobody's calling me. No, I'm not saying people are calling me a crook. Actually, I hardly ever get a bad email, but I'm just saying that's the reason why I believe that when you guys say something good, it gives me a lot more credibility than me talking about myself. That's the reason why. So LH, we talked about that one. Next one, AMBA. Right here, I would use the 15-day EMA, 47. Be right here, 75 put, 45. Right here, 45 put. Oh, Baidu, how many times would I talk about Baidu? How many times? No, I'm not a politician. How many times would I talk about Baidu? I've talked about Baidu like 100 times. And yes, it's on my list again. The stop loss is right here, 98. And we'd go 15 days out. There you go, PM. You could do that. You could do a spread. Good, Eddie. Good. Plenty of times. Post the AbbVie and Kava. Owner, if you want credibility, then you should post the wins and losers, not just the wins. For what program, owner? For what program? Watch this. For what program? I'm waiting for owner to tell me for which program. True Trend and Stealth Surge. Owner, is there no members area with the spreadsheet that shows you all the trades for True Trend and Stealth Surge? With all the stuff that goes with it? Yeah, it is. So what were you saying about my credibility, owner? By the way, Kava, let's see, all the programs I have with Roger, all the wins and losses are posted. Bingo.
And you usually get cheated on your fills.
And I usually get cheated on the fills.
I don't know who does
all
that.
the wins and losses are posted. So what were you saying, owner, about Stealth Surge and True Trend? Huh? What? Because last time I checked, they're in the members area.
I mean, if you're referring to open trades, I mean, obviously we're not gonna.
Yeah, we can't do an open trade because it's an open trade. Once it's closed, we put it in the members area. I do, owner. I do. No, I don't ask for wins. I ask for losers too. Yeah, you could tell me if you lost. I'll put that in there as well. Thank you, Adam. Yeah, of course. So the option would be here, 15 days out, got to go a little deeper. Got to go right here. 69 is good. You can do the 99 put. And I've mentioned this stock at least 10, and I'm not kidding, at least 10 times. At least 10 times. No, I don't get mad at all when you mention losers because I mention them most of the time, owner. That's a good question, Billy. I don't know. I have no idea. I don't. No, Alex, that's not true. Nope. That's why I asked what program, you see? If he said Telegram, if he said the pit, my answer would be different. But he said True Trend Tro and Telegram. I don't post anything, winners or losers there. None of it. All right, let's continue. Boy, Pat. By the way, speaking of winners and losers, Alex, how have you been doing? That's what I'm talking about. I always discuss my losers and why they're losers so that you guys don't make the same losers. I do. I do. All right, let's continue this. Autodesk. But I did want to know how Alex is doing. All of them. Oh, this is a stinker. Look, we had a gap here. But Roger, this would make a good gap to green trade. No, it wouldn't. No, no. So this would be a fade. I would put a stop loss right at the 200-day moving average. Yeah, I don't really see it. Let's go 15 or 22 days out. Prefer 22 days on this one. 75 delta. 220 right here is the sweet spot. If you want to spread it, you can against the 205. Feel free to spread it against the 205. Okay. All right. Okay, let's attack the long side now. I just can't please everybody. That's what it is. All right, let's do the long side. Matt, close your ears right now for this trade. Close your eyes and ears. I told him to get out of it yesterday, and we would have made.
Oh,
I told him to dump it yesterday, and he did. Up under protest. He was protesting. About 40. I would put a stop loss at about 46 level. Do you identify the trade as an official trade? Joe M, for what program? What program? For any program outside of the trading pit, all my trades are official trades and they're all identified. There are no unofficial trades. For the pit, I identify them as go long here, go short there, or if I say it's a bonus trade, that's not an official trade. No, Cyrus, long side, delta to the long side, not short side. We're now moving to the long side. So yeah, I like this to the long side. So far, airline stocks have been coming out pretty good numbers. We would go 22 days out here. We would go to the 74 delta, 47 strike price right there. Good pink sparkles. Hopefully, I helped you with that one from this morning's video. Matt, are you getting all this stuff?
yeah.
Good.
Hey.
Okay, so I'm going to give you, put on your big boy pants. I'm giving you Alaska Airlines. I don't expect you to take both Delta and Alaska Airlines. So I'm just going to give you
Actually,
both, but
don't take both of them.
don't take both of them. I'm not expecting you to take both of them. Do not take both of them. Don't do that. Okay, they're very correlated, but I like how it's breaking out. I would put my stop right at the 15-day EMA, 29 days out, go about 75 delta, 42.50 right here. Schwab. I really like Schwab. I'm looking possibly to put on Schwab. I'd like to see it right here at this level, but I like Schwab. I do. Thank you, Ron. Very nice of you. Get what Ron said too. That's very nice. BB, I can. Yeah, I'll give it to you right now. Hold on. Here. I posted it earlier this morning, earlier this week, but here it is again. There you go. If you go all the way down, it has those percentages. Those percentages are all the way down on the sheet. Here, look, right here. See that? All the way at the bottom. So you could see what the biggest stocks that have potential plays that we may want to take advantage of. Okay, so Schwab right here. We would go 22 days out, 70 delta right here. Nice price too, 72 call. Not bad at all. I like Wells Fargo. Would I buy Schwab and Wells Fargo at the same time? No. I'm currently looking at Wells Fargo. I'm hoping the market gives us a little pullback so I could buy Wells Fargo on a pullback or Schwab. I like these
It
two.
is
What?
weird to hear you say that.
What did you say?
It's weird to hear you say you like Wells Fargo.
Yeah, I know. Good, Cyrus. Good. Yes, Mark, with one share. but nobody listens to anything I say, as I always say. Right here, stop loss would be right around this pivotal area, about 56.50. It's not that volatile of a stock anyway. We can go 22 days out. We can go to the 66 or 80. I prefer you go to the 80. They're not that expensive. 57 calls right there. Yeah, I like Wells Fargo right now. I do. See, look at the market. Hit that level, and we're coming off. What I like here is these bars are very, very small, very sheepish. That's good. Hopefully, it'll come back up right after hitting the 50-day, the VWAP. But look at that level. Told you, 504. Never fails, right? Let's move on. AEM. I do have a love and hate relationship with it. I do. Good, Pink. Good. Get that too from Pink. Oh, he has Schwab too. Good to know. See, Lance and I, we don't really communicate about what he has or what I has. I don't know what he's doing. He doesn't know what I'm doing. We couldn't be more different from each other, which is great, right? That's what I always hear from everybody. You guys are so different from each other. It's ridiculous. Right here, 60 calls. He sticks to his kitchen. I stick to my kitchen. LMT. Right here below. We still have a heightened geopolitical tension, folks. Don't rule that out. Don't be dumb and think that all is good in Baghdad. Okay, it's not. 447 to 449 would be my stop loss area. This is a volatile beast. We got 15 days out. We would go to 71 delta. We would go to a 450 call, and then what we can do is we can offset it with the 462.50. So it'll cost you about $5. Every time there's going to be geopolitical talk, something will happen. Yeah, we're very different. That's what I hear. I mean, we arrive at the same conclusion. That's good. Yeah, we kind of focus on our own stuff. Okay. Joe says, how can we see the track record before we buy the program? Well, calling customer service and asking them to show it to you would be a good start. Right, Joe? That would be probably a good start. It's in every members area except Pitt, that we just do Telegram and it's timestamped. All right, all right. Next one, LNTH. I think this one may have no, I don't like this one. I don't like this one. Forget it. Forget this one. And I don't like, forget this one. Forget it. Forget I ever brought it up. GE. I like GE. I do like GE. Tony says, I'm confused. LMT. Yeah, look. LMT. It's making swing highs. Here, it's been really strong. It's a defensive stock. It's above the 15-day EMA. Use this as a stop right here. Go about 15 or 22 days out and do a debit spread. Oh, the two prices you want me to repeat. Okay, they're a debit spread. One was the 450 and the other one was the 462.50. You're buying the 450 and you're selling the 462.50. So this 720 will offset this 1360. Hopefully that makes some sense. And you can always watch the video, replay the video. It's on YouTube live. All right, GE. I like GE. I like GE a lot. 151, 15-day EMA. No problem, guys. No problem. Right there, 151. 15 days out, 73. Ooh, this thing is expensive. Why is it so expensive? Oh, here it is. That's the right one right here. That's the right one. $9. $9. And you can offset that with the 162.50 with the 3. So it'll cost you about $5, $6. It's got like all these wacky prices in there. See, the market's not pushing back too hard. It's pulling back. See, here's what you want to look at. Look at the size of these candles and look at the size of these candles. The only thing I don't like here is this baby right here, which again keyed off of the 504. But when you start looking at the size of the candles, you start creating a story in your head with this, and that's where you want to be. And I think I've helped people do that by kind of comparing the size of the candles and so forth. All right. Next one and the last one. Oh, I really like this. I like this one a lot. Doesn't it look good, Matt? Looks like it's bouncing off of the 50. Looks like it's got more upside here. Um, of course, it's spready. Murphy's Law, right? 80 delta right here, 65 call. I really like this one a lot. It's maybe a good swing trade. Why the wacky options? I don't know. Maybe because of the GE had the split. Yeah. So when you look at that, that may be the. So just look at one of them. Look at this one and this one. Look at every other one, if you will. That makes sense.
GE was not okay. So when we say split, it wasn't just a stock split. They split the company into three different tickers. So it's quite a different scenario with those.
Um, let's see. Is it related with Delta? No, it's not related to Delta. What's strike for GE? I thought I posted it here, but if not, I'll do it again. You can go about 15 days or 22 days out, and you would go, let's just use the 22 days out. You would go long the 70 right here, 150, and you would liquidate and you would offset it with the 160, 162.50 right here. Where is it? Hold on one second. You're looking at calls. What's going on here? Or 165. So basically, they should be like $3 or $4, and the 150 should be about $10. So 150, 162.50s. 150, 162.50. Still good bounce off the VWAP. Still good short. Keeps bounce. Yes, I do like ABT. Answered, Ken, that is usually once in a blue moon. They have been agreeing more and more scary. Me and Cyrus, or me and someone else? Oh, me and Cyrus, yeah. All right, Matt, where's my lunch?
Right there
Oh,
in the
okay.
chair.
All right, you do seasonality. I'm going to hang out here and watch you guys. I'll have more updates in the Telegram channel shortly. Okay? And if anybody has a question for me, please, 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 please ask. All right, I'll talk to you guys in a bit. If you have a question for me, my chat is still open, so I will answer questions in the chat. Go ahead, Matt.
All right.
Tony's asking me this a great question. When you do a spread, do you have to do it together, or you could do it separately? Tony, that's called legging in versus spreading in. You could do it together, or you could do it separately. If you're a beginner, I suggest you do it together. If you're an expert, I suggest you do it separately.
Ready? Okay. If you mean an ETF, Karen, yes, there is. It's called JETS, JETS. All right. Here's seasonality to the long side. We're coming up on the long side a little bit, but nothing really sticking out except for healthcare. On the short side, really, there's nothing. That's not really what's interesting today. And on 10-day hold, we're just hanging out in the middle. We do it every day, so we'll look at it, but that's not where the fun is today. If we sort by long and short, the long side is longer than the short side, but the long side itself is not very long. Short side is 73. Long side was like 140, 180. 181 actually. Here's the fun part. It's been dull for a while, but there's actually some good looking setups in seasonality today. So I'm going to give you all of them for free. All right, so they are highlighted. Here are the first few. I'm going to do it like this. Let's make this super tiny. And we don't need it to be short, though. There we go. Just so we can keep an eye on this list. And then I'm going to show you the charts of all these because they look great. All right, we'll just keep those over there. And let me shorten this. And there we go. Now we can see everything. Long is get in on the day. So today at the close and get out when the close takes out the previous day's high, or if 10 days have passed and the exit hasn't triggered. Yep, it's all the same. Sorry, I was answering Roger there. Okay, let's start. Meta looks fantastic. Looks great. It's above all the three moving averages. It's above the 8-day EMA. It's holding above the 8-day EMA, and it's holding above VWAP. Earnings wise, they might actually be close. So keep an eye on that. Let's actually do this. Let's expand. 10 days. So yeah, earnings are around the corner, so be careful. But if you want a very fast trade, that all looks awesome. Next one is Tractor Supply. Those things are popping up everywhere down here. Tried to go down past the 50-day moving average, sprang right back up. Notice this is what's interesting. The price action on the SPY has been horrible the last 2 days, and it has been recovering nicely. So it's been bucking the trend. Very deep pullback, but probably has some decent room. You do have earnings in a week, so you're gonna get in, and get out. But now it's probably not a bad time to look for longs unless we totally reverse today. Okay, next one. Oh, West Rock. That's kind of our bread and butter setup, almost. Was a little consolidative. We like it to be trending and do the pullback, like right here. Let me move it. That is our favorite setup, at least mine. But where did I learn it? Right there. Pulls back to the 8-day EMA. It's in a nice trend. Bounces off. But same thing here. It's hitting the 8-day EMA, so you'll want to see it get over. But if it does, you've got a lot of room to the upside. And earnings are in 2 weeks, so you've got plenty of time there. Next one's PXD. This is the same setup. Honestly, intraday price action does not look as good, so hold for that one for now. I'm going to skip that blue one. TRGP. Similar setup, but I need to see some upside action on this before I want to get in. Also has earnings coming up. Let's bear in mind, don't hold this forever. Here's one you can buy right now. Generac. Super strong today. It's coming back way up like a bad lunch. I mean, this thing is just bursting. And it's not too expensive. You could wait for a pullback. You could just jump in. I'd probably just jump in if you wanted to take it. My thoughts on Netflix. Sure. It has earnings today. I have no thoughts. Earnings after the close. I know front run earnings. GE. Roger likes GE. We all like GE. I didn't check. E. Or which one? Jerry. Uh, yeah, options are fine. They're a little expensive, but they're nice and tight. Great one. Great one, Robert. Trading technology, similar setup. Price action's a little weak today, but overall, probably looking at some mean reversion there back to the upside. That might be the. Oh, nope. There's two more. And then that blue one. Johnson Controls, great setup again. It's butting up right up against the 8-day EMA. Yeah. Options are tight. You can take the May options. I'd probably take the 65s, May 17th, but it does have earnings at the end of the month. So you get in, make sure you're in and out. Next one is NRG. It's a good ticker name since it's energy. Uh, this one does not look as good now. It's not holding the 8-day. Needs to hold the 8-day. So scrap that one for now. This blue one, Lulu, it's not your typical setup. However, it's really sold off quite a bit. That might be the bottom. So if you're looking to add this to your portfolio as a long-term hold, you're getting a significant discount. So something to think about there. And if you like Lulu, uh, just something to keep in mind because it's a great discount for an overall pretty healthy company. Let me move over to the short side because we got a few, especially commodities. Corn, first one. If you couldn't guess, it's the corn ETF. Corn looks weak. Broke that consolidation range right here. The market is dropping right now because Bostic just said that doesn't, yeah, no bike till the end of the year. Doesn't look like they're going to be able to lower rates until the end of the year, which is better than the rate hike that's slightly getting priced in now. The odds are not zero anymore. But the bike has been pushed even more. Okay, I was on corn. Next one is Ralph Lauren. It's breaking the 100-day moving average. If it breaks this low on the day, you've got quite a bit of room until it's going to find any kind of support at 147. That's $10. So that could be a nice trade. Options are tight enough. I'd probably take the 155 puts. May 17th. This only has monthlies. But again, I would wait until it breaks this low, if it breaks that low. Next one is SRE. Had a bounce day yesterday. This one's iffy. It could turn around, but to me, the probabilities look like it's going to try to keep going lower. That was a short covering day, and with no follow through today, it doesn't make me feel warm and fuzzy. If it breaks the 67.50 level, I would be pretty short. No earnings to worry about on that one, and options are tight. The May 17th 70s, if you want to be in the money, are only 280. Roger at rogerscott.com, Ray. Next one's the bond. DLT. Doesn't look great. But the interest rate talk could affect that one. So careful with that one. Probably not my favorite. CRM looks like crap. Gap down. Looks like it wants to break the low again. Probably isn't going to find support until like 247. This area right here. Maybe here, but either way, I mean, this is you've got a wide open space here if it wants to break the low. And options are, I'd go a little bit. I personally would go a little bit shorter on this. I'd probably get to May 3rd. Got 15 days on those. And they're a little more expensive. The 272.50s are 620. You could maybe spread them with the 265s. So it'll cost you about a little bit less than $3. One more. Soybeans. Noticing the trim with commodities. Look at corn and look at soybeans. Same situation going. Looks like they're breaking that range they've been in. That's corn. This is soybeans. Looks like a great short, especially if you break this level. And I did have two on 10-day hold that I liked. I thought I did. What's going on here? Oh, that's and a few of these could be repeats from the long and short side. These are longs. Any looks pretty strong. Didn't like that. It totally rejected going under the 200-day moving average. It's been springing back up. But actually, we're going to probably throw this one out because earnings are in 5 days. So disregard that one. And then Lulu as well. The seasonality is really strong on it. Looks like it's done. Done going down. Wants to find some upside relief. It is recorded. It's on YouTube and it's live right now. And I'll give you a link. That's actually was my last stock. Right here. That's all I got. Was quite a few today. Yep.
By the way, if you guys are in the pit, remember that CRM trade we closed out, the short on Monday? And if you guys didn't get a chance to close it out, you could close it out now at a profit. Just FYI.
Yeah. Or you could probably hang on to it. It looks
Yeah, or you
terrible.
can hold on to it. CRM, as I said on Monday, looks like it's going.
Yeah. Cool. Well, hope you have a great day, everyone. And we'll see you tomorrow, 11 o'clock. Bye.